Imagine walking onto a crowded escalator in a massive luxury shopping mall. You step on, grab the handrail, and stand perfectly still. Effortlessly, you rise to the top. For the last 40 years, the American economy was an escalator. If you did the absolute bare minimum, if you bought a standard index fund, if you managed to secure a 30-year mortgage on a suburban house, if you held a middle management corporate job, you went up. You didn't have to be a financial genius. You didn't need a complex strategy. You just had to step onto the machine and let the rising tide of the global economy lift you into the upper middle class. Last year, the escalator ground to a halt. Next year, it goes into reverse. Soon, you are going to have to sprint full speed just to stay exactly where you are right now. We are constantly fed a narrative of endless opportunity. The internet gurus, the television pundits, the financial planners, they all sell the same comforting illusion. They tell you that wealth is a matter of mindset, that there is always a new gold rush, a new bull market, a new chance for the average person to break out of the rat race. That narrative is officially expired. Welcome to 2026. The year the economic drawbridge is quietly, permanently pulled up. To understand why this is happening, you cannot look at the stock market and you cannot look at unemployment numbers. Those are trailing indicators. They are shadows on a wall. To understand the trap that is currently closing around the middle class, you have to look at the invisible plumbing of the global financial system. You have to look at the cost of capital, the architecture of free money. For the past 15 years, you and I lived through a profound historical anomaly. After the financial collapse of 2008, the central banks of the world panicked. To save the system from a deflationary death spiral, they pushed interest rates to zero. In some parts of the world, they actually pushed them below zero. They effectively made money free. When money is free, the fundamental laws of financial physics break down. In a normal economy, investors demand a return on their capital. They want to see profits. They want to see sustainable business models. But when interest rates are zero, capital becomes desperate. Trillions of dollars began aggressively hunting for any return anywhere. This is how we ended up with the great economic hallucination of the 2010s. We saw venture capitalists throw billions of dollars at ride-sharing apps that lost money on every single trip. We saw food delivery companies subsidized by Wall Street, allowing you to order a burrito for less than it cost to make. We saw digital pictures of cartoon apes sell for the price of a commercial airliner. And most importantly, it artificially inflated the value of your labor. If you were a white-collar worker during this period, you felt invincible. Tech companies, flush with virtually unlimited free cash, began hoarding employees. They hired project managers, community developers, and consultants by the thousands, paying them six-figure salaries to work 3 hours a day and drink kombucha on tap. People mistook this anomaly for a permanent reality. They thought they were getting rich because they were highly skilled. They were not. They were getting rich because corporate America had a massive surplus of free debt and needed somewhere to warehouse it. But free money is never actually free. The cost is simply delayed. The squeeze. The bill for that era finally arrived. It took the form of global inflation. When the price of everything from groceries to gasoline began to violently accelerate, the central banks were forced to act. They had to raise interest rates, and they had to do it faster than at almost any point in modern history. The moment they did that, they flipped a switch in the deep machinery of the economy. The era of growth at all costs died overnight. The era of ruthless efficiency was born. Look at the corporate landscape right now. Companies are no longer being rewarded by the stock market for hiring. They are being rewarded for firing. Every time a major corporation announces a 10% reduction in its workforce, its stock price surges. The system has realized that human labor is the most expensive, unpredictable liability on the balance sheet. This brings us to a critical inflection point. If you are paying attention to the quiet consolidation of wealth happening around you, you are likely noticing a shift in your own industry. The entry-level roles that used to teach you the business are vanishing. The middle management layers are being flattened. I highly encourage you to drop a comment below sharing exactly how your specific profession is changing right now, because the mainstream financial news will never report on the realities of the ground floor. And if you want to navigate this transition rather than become a casualty of it, you need to subscribe to this channel. We strip away the corporate PR and analyze the brutal, unemotional math that is dictating your financial future. Now, let us look at the final nail in the coffin of the easy money era: the great AI deception. If you open any social media platform today, you will be bombarded by a new kind of propaganda. You will see teenagers in sports cars telling you that artificial intelligence is the greatest wealth transfer in history. They claim that if you just learn to use the right language models, you will build $1 million business from your laptop. This is a fundamental misunderstanding of what artificial intelligence is designed to do. When the internet was built, it was a democratizing force. It decentralized power. A kid in a basement could build a website that competed with a multinational media conglomerate. It created millions of self-made millionaires because it lowered the barrier to entry for everyone. Artificial intelligence does exactly the opposite. It is a centralizing force. You cannot build a foundational AI model in your basement. It requires billions of dollars in specialized semiconductor chips, massive data centers, and the energy consumption of a small city. The infrastructure of this new era is already entirely owned and controlled by 4 megacorporations. When you build an AI business today, you are merely acting as an unpaid research and development department for a monopoly. You build a clever wrapper around their technology. You find a profitable use case, and the very next quarter, the monopoly simply updates their base model to include your feature for free. Your entire business vanishes. AI is not a ladder for the working class to climb. It is a guillotine for the working class's leverage. It is designed to automate the exact white-collar jobs that used to serve as the stepping stones to wealth. Junior legal work, financial analysis, copywriting, basic coding. The roles that historically allowed an ordinary person to accumulate capital and buy their way into the ownership class are being structurally deleted from the economy. The permanent renter class. This is the uncomfortable truth of 2026. We are witnessing the death of the economic crossover. For the last 80 years, America operated on a unique social contract. Labor could be reliably converted into capital. If you worked hard at a normal job, you could save enough money to buy capital assets, a home, a stock portfolio, a small business. That contract has been torn up. The price of capital assets has completely detached from the reality of wages. Real estate is the most glaring example. You are no longer competing against other families to buy a starter home. You are competing against algorithmic hedge funds and private equity firms who are deploying billions of dollars in cash to sweep up single-family homes, with the explicit goal of converting entire neighborhoods into permanent rental zones. They are turning the American landscape into a subscription service. This is what a post-easy money world looks like. It looks suspiciously like neo-feudalism. If you already own the assets, the land, the algorithms, the data centers, the intellectual property, the system is mathematically programmed to make you exponentially richer. The compounding effects of technology and high interest rates will protect your fortress. If you do not own the assets, you will be slowly transitioned into a life where you own absolutely nothing. You will not buy software, You will pay a monthly licensing fee. You will not own a car. You will subscribe to a mobility fleet. You will not own a home. You will lease an apartment from a corporate landlord whose pricing is perfectly optimized by artificial intelligence to extract exactly the maximum amount you can afford to pay without defaulting. You will exist in a state of perpetual, perfectly calculated financial exhaustion. The final window. None of this means the world is ending. In fact, over the next decade, the stock market will likely break records. Global GDP will climb. The corporations that successfully replace their human workforce with automation will generate levels of profit that were previously unimaginable. The economy will look incredibly healthy on paper. But the economy is not you. The era of stumbling into wealth is over. The era of the accidental millionaire is dead. The window of time where a normal person could make a few decent decisions and coast to financial freedom is rapidly shutting. We are entering an era of extreme financial polarization. Surviving it will require a level of strategic ruthlessness, deep technical competence, and aggressive asset accumulation that most people simply do not have the stomach for. The rules of the game have been permanently rewritten by the people who already won. The math is clear. The drawbridge is moving. The only question that matters now is, what side of the wall will you be on when it finally locks?